Hi, I'm Christine Short, Associate Director with S&P Capital IQ, Global Markets Intelligence. In this week's Lookout Report, we focus on expectations for first quarter corporate earnings. The first quarter earnings season for S&P 500 companies officially kicked off on Monday when aluminum giant Alcoa reported after the close. Currently, S&P Capital IQ is expecting a growth rate of 0.7% for the first quarter. While this is quite a low figure and would be the lowest growth rate since the third quarter of 2009, it is the highest first quarter estimate we have seen in a month. Analysts expect growth to be led by both the telecommunications services and consumer discretionary sectors, with estimates of 9.5% and 7.9%. It's important to note there are only 8 companies within telecom, so any swing in one company's growth rate can affect the entire sector. Expected improvements from 2012 laggards, such as Sprint Nextel and Metro PCS, are giving a boost to the sector. As for consumer discretionary, that sector is driven by the household durables and textiles, apparel, and luxury goods industries. Within household durables, which are expected to grow 39% year over year, the home builders are anticipated to do best, not so surprising considering the strengthening housing data reported in the first quarter. The high estimates for some of the retailers also indicates the consumer remains healthy, with textiles, apparel, and luxury goods profits expected to rise nearly 50%. Retail sales were strong throughout the period, with March's consumer sentiment report providing the best result since the beginning of the recovery. On the flip side, the two sectors expected to be the biggest laggards this quarter are industrials and energy. With industrials expecting negative growth of 2.6%, it's a bit concerning considering the sector is often seen as a proxy of global growth. The industries dragging on the sector are machinery and air freight and logistics, estimated to report negative growth of 15% and 5% respectively. Analysts project the energy sector will contract by 1.7% in the first quarter, the second largest laggard in the overall index. While energy costs did rise in the first quarter of this year, they were not nearly as high as they were in the first quarter of 2012. For instance, Brent crude oil averaged $95 a barrel in the first quarter versus $103 a barrel in the corresponding year-ago period. Similarly, gasoline averaged $3.02 a gallon in the first quarter of 2013 versus $3.08 in the first quarter of 2012. At this point in the season, only 29 companies have released results, but the number of companies surpassing analysts' expectations is historically low. Of those 29 companies, only 55% have beat earnings estimates, below the 62% 10-year average. We're also seeing similar top-line results from S&P 500 companies, with 55% beating revenue expectations in comparison to the 61% historical average. Next week, peak earnings season begins, with 73 companies scheduled to release results. I'm Christine Short, and thank you for tuning in to this week's edition of the Lookout Report.